This is Agriculture Today. I'm Samantha Bennett with the K-State Radio Network. Ahead of us on this Friday's program, we have this week's grain market update coming from K-State grain market economist Dan O'Brien. He covers the relationship between the grain futures market, as well as some insight for producers on whether or not to sell or stay put in these current market conditions. Also ahead, K-State range scientist Keith Harmoney discusses the relationship between precipitation and rangeland forage production. As always, this week's agricultural weather report comes from K-State meteorologist Chip Redmond. That and more awaits us here on Agriculture Today. You're back now with Agriculture Today, and we're starting off our Friday program, as always, with Dan O'Brien, our grain market economist here at K-State. Start off with our grain futures review. What have we seen in our grain futures this past week?
Well, I think what has the attention of most people is probably what happened Thursday. A major sell-off in soybeans. The lead July contract closing at $15.93, which is still a tremendous historically high price, but it was down 59 some cents per bushel. Wheat, 10.05, also historically high, but down 32 and a quarter. Corn was down not quite as much proportionally, down to 7.46 and 3/4 for the July contract, down 21 cents. I think as you and I had talked before we came on air, it's important to understand the context of those different price moves. You come back and look at corn first. Well, this fall that it happened, down to 7.46 and 3/4, basically still keeps us pretty much in the middle of the price trading range that we've been in since the last part of February, ranging from $7 to $8.25. So 7.46, pretty much in the middle of that. Last couple, 2-3 days, down some, but still not a major change in where we're at. More concerned, though, when you look at the wheat market, and again, we're in the midst of harvest of the hard red winter wheat crop, and seasonal lows are not uncommon. Even if the crop is not that good, still you've got wheat coming that'll be sold. And we can come back and talk about that in terms of how farmers may respond to this. But you look at 10.05, and that's coming down, just touching on basically a $10 low that happened back around the 1st of April, just a few days ahead of that. So we are coming down towards historic lows, recent lows, for the July 2022 contract, and that has concern for people that watch closely the technical side of the futures contracts. Whereas corn, pretty much in the middle, we are down towards the lower end of the recent trading range for wheat, so that's of concern. For soybeans, somewhere in the middle. Basically, we had been trading in a range of about $15.60 up to just under $18. Closed yesterday at $15.93 and a quarter. So we're only 40 some cents above the lower end of the trading range, which extends all the way back to into February. So different reasons for that. I think there are some supply demand factors at play, and that would be the absence of China from buying grains here of late, particularly for soybeans. That's a big deal. But a lot of what happened yesterday, if we look at the overall factors, again, not a lot of grain supply demand changes. In fact, some very bullish things happening out in the world, but rather as the financial markets are receiving signals from respected prognosticators that the likelihood of a recession in the U.S. is, it's a 50-50 deal. So at least that's what some folks some trading analytical houses that are trusted have been saying. So that's, of course, having to do with high gasoline prices, inflation, the actions by the Fed, a whole number of things. So it brings back something you and I talked about last week, in that what happens in the financial markets tends to bleed over. It tends to have impacts on the commodity. And it seems most of what happened yesterday is a response of the agricultural futures to what was happening in the overall financial markets. In the notes that we hand out each week, I do have on there a chart of the Dow Jones Industrial Index, as well as on the oil market. And here we're trading at about 30,677. And we were at a high not that long ago in January of about 37 some. So you're down 20 some percent, and just a lot of concerns emerging about where the markets will go. So with these drops, then people in agriculture are, on the one hand, they're saying, well, our supply-demand picture hasn't changed that much, but yet in terms of what people that are pricing our commodities are doing, they're dropping the price based on broader financial concerns. So the conundrum is, do we, when we do get, say, wheat now in hand and fall crops coming on, does that motivate people to wait for something better to come because they think the fundamentals probably supportive, or is this big systematic? Does that compel them to more, quote, pull the trigger on cash sales? I guess when you take a look at, since the wheat harvest is right upon us, look at cash prices for wheat as of yesterday, June 23rd, in Salina, really kind of a bellwether market in the state. Highest cash price at the major terminals was $9.90. If you look at a week ago, that number was about $11.28, as I recall. So we've dropped about $1.38. Now, on the one hand, the $9.90 is a tremendous price, but to see that recent drop probably weighing on the minds of decision makers as to where they sell. Who sells at a time like this? Well, anybody that has cash flow needs, people that don't have storage available on farm, and they've taken their wheat to the elevator, they hold on to that crop, they'll be paying some type of commercial storage amount. Got people that, as they view the risks that are out there of continuing to hold and paying more costs, they may be compelled to store. To go ahead and sell. Those that have storage or are more likely to view opportunities that could come down the road and as something to hold for, they may not be. It makes a lot of difference whether we're putting wheat in commercial storage or on-farm storage. Commercial storage probably tend to sell quicker because of the higher costs. On-farm tend to be a little more circumspect about when we pull that trigger.
I'm sure they're going to be watching these markets closely, so hopefully this is providing them with some insight. But we've also seen, you mentioned, some of the changes in the corn market, futures, what we've seen. Some of that has to do with some of the weather we've seen too, right?
Yes, as you point out, we've had hot, dry weather for the most part for the last week or so. And by itself, without the financial markets, we'd be at least moving sideways until that worked itself out. There is a weather report that in about a week, within the next 6 to 10 days, that some moisture is expected in some key corn growing areas, corn and soybeans, basically. So that expectation is, something that's hoped for. But really, I think we're in a situation now where in the world we're hoping for good bushels everywhere because we're that tight for good yields. That in itself is just one more factor that's kind of holding down any rally in the corn market. And note still, even on yesterday's market, soybeans were down 59 cents, corn down 21. So they're still concerned about all this, how it works out. So I think we're in a situation now we're in a weather market view of the world. If those rains don't come to the degree that we're hoping for, then you've got support coming thereafter. So the market will be watching those weather systems to see if they actually deliver on the hopes and promises of moisture, and the markets will respond accordingly.
Absolutely. And we'll have more, of course, on today's programming as well ahead with our meteorologist, Chip Redmond, here at K-State. So he'll be covering a bit more in detail some of those weather reports here to come for the state as well. And then I know we've mentioned that we've really had a cash market response in terms of all that we've seen. So in terms of how we see this play out in the coming weeks ahead, is there anything of concern particularly for producers to think about?
I think, and this is something that prior to the start of the show, I neglected to mention to you. On June the 30th, there's a USDA acreage report that'll come out. There's also a stocks report that'll show what usage in recent quarters have been. We watch that mainly for feed usage. That acreage report on the 30th has the potential to bring volatility to the market in either way. And been some expectation that perhaps corn acres will be a little bit higher than the prospective plantings report at the end of March had shown. So if that happens, that's a little bit bearish. If it should go the other way, in some people's minds, heaven forbid, then you cutting down the likelihood of a strong U.S. crop all that much more. So that'll be a big day and big information that could bring volatility to the market. And as you look at cash prices, we'd be remiss if during wheat harvest we didn't talk about what things could go. I would think, building on what we had mentioned a few minutes ago, again, we're probably anticipating a seasonal low here for wheat. And no doubt that's the general, I guess, narrative of the market. But we heard Antonia Broyaka out of at the Ag Econ department, other people around the world talk about the great challenges of getting wheat out of Ukraine, and also that we have major drought in parts of Europe. So that's also a major wheat supplier, that dry conditions in some in Russia. If you were to force Dan O'Brien to give his opinion, I think that the lows in the wheat market, as they stand on their own without the financial markets coming in, would be temporary. It seems we have enough strength and need for wheat around the world from a supply-demand point of view that prices we'd see now will be temporary through the harvest time. And again, that's assuming the overall economy numbers don't wash everything away. But overall, I would think that we'll have strength in the wheat market post-harvest, nothing that would indicate major weakness in it. And so we'll see.
Dan, that about wraps up our time that we have for today, but I know next week we're going to be touching on ethanol and kind of some of the trends we've seen there and how those will continue and play out. That's to look forward to. That was K-State grain market economist Dan O'Brien for this week's Grain Market Report. We'll be back with more now ahead on Agriculture Today. Welcome back to Agriculture Today. We're back now with Keith Harmoney. He's a K-State range scientist, and he's going to be discussing with us the relationship between precipitation and rangeland forage production. So, Keith, thank you for joining us.
Yeah, thanks for having me on today.
Absolutely. So my eye was caught by this article that you wrote recently, and it was covering this relationship between obviously precipitation and then actual forage production that we've seen across the span of decades at a research facility. And that research facility is K-State's Agricultural Research Center, which is located near Hays, Kansas. And like I said, it's had decades worth of research gone on there, close to 80 plus years now. So tell us a bit about the research and what it has looked like over the years.
Yeah, we've had forage research and rangeland research going on at this center ever since the 1940s. And so we do have several decades of forage production and grazing trials that have been going on out here at this research center. We've had some, I guess, what would be called classical long-term stocking rate studies that have occurred here, as well as other grazing studies that have looked at different grazing methods, such as intensive early stocking, modified intensive early stocking, and also combining tame forages with native rangelands. And so we have a history of several different grazing systems out here and research on those. And along with some of those studies, we look specifically at precipitation and environmental conditions and how those relate to forage production. And so we have many years of looking at those relationships together. Because
of that, you guys have put together several reports now that includes data spanning, one report specifically came out in 2013, and its data that you shared spanned 36 years. So specifically, that looked at, like you said, the relationship between precipitation and rangeland forage production. What did that data really tell us?
Well, with that data, what I was looking at was trying to find a relationship between precipitation and the end-of-year forage production on our rangelands, and then trying to find what month or combination of months together best predicted what our end-of-year dry matter production was going to be, what our end-of-year yield would be, based on those months' worth of precipitation. And what I had found out in doing that analysis was that by putting May and June precipitation together and looking at that total, that was the best early overall predictor of what our end-of-year dry matter was going to be in our native rangelands out here in western Kansas. Those 2 months together ended up having the best overall relationship in trying to predict what our end-of-year yield would be.
And when we take into account the fact that May and June seem to be the key months when we're including all these different factors, why really is that?
Well, one of the reasons is that's the time of year when our grasses have their greatest growth potential. May and June are the 2 months out of the growing season that we typically see the most production out of our grasses. You know, those are the times of the year where they're putting on a lot of leaf material, and they also will start putting on some stem material at that time too before they put on seed heads and go into seed production. And so those early time periods are the times when our grasses are growing the fastest and trying to put on the most dry matter. So those are the times of the year, that May and June time period, when they need the water in order to do that.
So really taking into account, precipitation rates at that time is really what you guys found to be key.
Yeah, the precipitation during that time period is critical for those grasses to grow, and it is going to be our best early predictor as far as trying to tell how much forage we're going to have produced in those pastures by the end of the year.
And from what I understand, when you were looking at all this data, there was also a bit of a sweet spot in terms of how much precipitation was coming in relation to the forage being produced?
Yeah, when looking at the data, I found that the best overall relationship was when we had up to our average amount of precipitation during that May and June time period. When we looked at May and June precip and our forage yield at the end of the year, with our average or less than average precipitation during those May and June time periods, the relationship was very linear. It was almost a direct relationship. Mm-hmm. Now, when we had more than our average precipitation occur in that May and June time period, that relationship really broke down, and it was hard to predict how much forage would be produced at the end of the year. We got more forage, but it was hard to predict just how much there would be. And I attribute that to more than likely, if we're getting above average precipitation during that time of year, it's possibly coming in larger events, and so that we have more runoff. Mm-hmm. Or our soils may be saturated enough already that when we get some extra rainfall, some of that will run off. And so we're not getting forage directly produced from the precipitation that falls because we're losing some of it in runoff.
Sure, and when we keep this all in mind, I think the first thing that maybe listeners tuning in will be like, well, what does this year really look like in comparison to those 36 to 40 years worth of data points that we've already seen? Is there any way that we can predict what we may see forage production-wise this year just based off of our precipitation values so far?
Well, looking at those 40 years spanned much below average precipitation all the way to much above average precipitation. So we had a huge amount of variation, the amount of rainfall that occurred in those years that were looked at in getting this relationship. And so in looking at that and then looking at the amount of precipitation that we've received at our research center here so far this year, we have received actually close to average precipitation for our May and June time period combined so far. So our forage production, at least right now, I would predict that we're going to be fairly close to average. Now, we still have about a week, just a little over a week left in our May plus June time period, and with high temperatures and a lot of wind, we don't have a lot of precip in our near forecast anymore. Mm-hmm. So we could be a little bit short of what our average will be. So when we go to look at our end of year yield, we may be just a little bit short of what our average has been based on this relationship. Folks that are further out west that are, well below average for that May and June time period, I would expect them to be much below average in their expected forage yield for the year. So using our station as an example, if we have close to two-thirds of our average precipitation for May and June together, we'll get about 75% of our average yield. that's approximately how the relationship works out.
Okay, and like you said, obviously this depends on where whoever tuning in is listening from, where exactly they are at in their precipitation that they've seen. But in terms of that average that's seen, is that based off of county averages, or is that based on more sort of regions across the state?
I would say that if you're looking at, say, half of your average precipitation for your region, that you would probably be looking at close to about 2/3 of your average yield for that region. So the percentages, the relationship percentages are going to approximately be the same, but you'll have to drop the overall level based on what your forage production potential is for your pastures.
Mm-hmm. And of course, depending on what we expect to see production-wise, people want to consider stocking rates and things of that nature. Do you have any advice for producers on that?
Yeah, that's one of the critical points to looking at May and June precipitation together, is that it is a pretty early indicator to let us know how much yield to expect by the end of the year. So if we know that we are going to produce significantly less forage by the end of the year, or expect to, based on our May and June precipitation, then we should be able to adjust our stocking rates accordingly, especially if we stocked originally to start the year, assuming that we would have average precipitation. This is a good trigger point to let folks go out and do some stocking rate adjustment earlier in the season rather than later in the season.
A good time to be sharing this information. Of course, like you mentioned, we're about a week left of this June, so a good time for producers to be keeping this in mind for sure. And if producers are wanting to find more information on this topic, where are some resources that they can find that at?
Well, one of these stories is listed in the May Beef Tips. That's on the K-State Animal Science website. The May Beef Tips is one location that they can find it. You could also look up in the New Prairie Press and look up our 2013 Ag Research Center Roundup for our Hayes Research Unit. And that write-up will be in there as well online. Or you could also send me an email. And my email is kharmone@ksu.edu.
Excellent. Well, all that information will also be in today's show notes of this segment. So if you want to find that, you can also find it at agtoday.net. So thank you so much, Keith, for your time.
All right. Well, thank you for having me on and talking about this.
Absolutely. That was Keith Harmoney, a K-State range scientist, here to discuss the relationship between precipitation and rangeland forage production. Welcome back to Agriculture Today. We are rounding out today's programming, as we always do on Fridays, with a weather report from our meteorologist here at K-State, Chip Redmond. So let's start off talking about, obviously, we've gotten some rain here in the past couple days. Well, in some parts of the state, I guess we can say.
Yeah, when we say we mean Manhattan.
Sure.
There's definitely a lot of folks that did not get rain this week. And then other folks that got too much rain. There's not really a good middle ground. And so Manhattan area, kind of in the northern Flint Hills there, kind of drifting into central Kansas, down into the south central Kansas near Wichita, all saw average to above average rainfall this week. Some areas, Viola got almost 3 inches of rain last night and the night before alone. And so a lot of moisture in some places. Meanwhile, the southwest and the northwest, and surprisingly the southeast, remain very, very dry over the last 2 weeks, with some precipitation departures of over 2 inches for those 2 weeks.
Wow. So obviously some variability, but there's obviously some monsoon patterns I think you've mentioned in the past that are playing out here.
Yeah, the outlook going into this month was pretty dry. We had that early moisture, and then we kind of thought everything would shift and stay completely dry for the whole state. We saw that over the last week up until a few days ago, but that's when the high pressure over the central United States helped usher in moisture into the southwest United States in an area that really needed rain, that were really dry, that had big fires. Well, that moisture's worked all the way around clockwise around that high pressure, and as the high pressure kind of shrinks and shifts off to the east, we're actually getting that monsoon moisture, which is helping us with some cloud cover, some cooler temperatures, and then these periods of showers and thunderstorms that we've seen this week.
Sure. And you mentioned that drought outlook that we had seen forecasted, but a new outlook actually came out today. So let's talk about that a bit.
Yeah, so the drought monitor came out today. It ended on Tuesday morning at 7 a.m., so it's the week prior, and that has been a really hot, dry week for the state of Kansas. As a result, we saw severe drought expand, especially in that Gove, Trego to Logan County area, and then we also saw abnormally dry conditions expand in south central, actually, ironically, where they got the rain the last few nights, so it probably offset that in the long run, but abnormally dry in south central as well.
So those, hopefully, drought conditions have been alleviated, like you said, by this rain. So was it all of those areas that were really needing it that got it, or were there some that were kind of missing it?
Yeah, southwest, northwest, and southeast Kansas, basically the 3 of the 4 corners of the state all missed out on this week's rainfall. And unlikely, unless we get some more moisture, they're likely to see further drought degradation as we go into the next week or two.
Mm-hmm. And as we talk about the next week or two, in terms of the entire state, what are some of the things we can think about coming up on the forecast?
Some moderated temperatures are expected next week with cooler than normal. We'll at least start the week. But as we get into the end of the month, expect temperatures to flip back to that really, really warm and humid at times. Precipitation-wise, you still have monsoon moisture in the southwest, and so we have a source of moisture if we can just get it here. And so the new 6 to 10 day outlook would feature into early July, and is saying a slight chance of above normal precipitation, which is a good sign. And even going into the 14 days into getting close to the end of that first week of July, still suggestion of above normal precipitation as that monsoonal flow just continues, and that'll help our temperatures at times when we do get it, but when we're not getting that rain and cloud cover, we're going to be really hot.
Which we expect this time of year anyways, as we're entering into July, right?
Yeah, we need to accumulate those growing degree days.
Absolutely. Well, like you said, hopefully that the first part of this upcoming week will be a little bit of a nice break for people in terms of the high temperatures we have been experiencing, and hopefully folks can look ahead to some rain to come. So thank you so much, Chip, for your time.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond with a recap of this week's agricultural weather and a look at the week ahead. That's it for today's program. We'll be back with more next week. I'm Samantha Bennett, and this has been Agriculture Today on the K-State Radio Network.